Well, the International Monetary Fund has warned that the West Asia war will push global inflation higher and slow economic growth as energy disruptions ripple across markets. Managing Director Kristalina Georgieva said the conflict has triggered unprecedented supply shocks with Iran's blockage of the Strait of Hormuz, cutting off a major share of global oil and gas flows. Now, even if the conflict ends quickly, the IMF is expected to downgrade growth forecasts and raise its inflation outlook in the upcoming World Economic Outlook. Georgieva summed it up while saying all roads now lead to higher prices and slower growth. Listen in.
Had we not have this war, we would have seen one small upgrade of our growth projections. Instead, all roads now lead to higher prices and slower growth. What we observe is threefold. One, the impact is large. Just to compare to COVID time, in COVID time, oil supply shrank by 12%. That was both demand and supply shock, but supply shrunk. This time, oil supply has shrunk by 13%. So we have a significant impact from oil, from gas, and from the interruption of supply chains from fertilizers to helium. Second, the impact is global. Everybody around the planet feels it. Energy importers feel it a lot. Now, even energy exporters, countries in the Gulf, Iraq, they also feel the impact. And three,
because they can't get their oil to market.
Because they cannot get gas, oil. They have facilities that are being bombed. You just look at Qatar. They are stating that 17% of their gas production is going to be absent for the next 3 to 5 years because of the damage done. According to the International Energy Agency, 72 energy facilities, production, distribution, have been damaged. 1/3 of those damaged more significantly. So even if the war is to stop today, there would be lingering negative impact to the rest of the world.
Meanwhile, Dimon, CEO of JPMorgan Chase, has warned that the war in Iran could trigger sustained oil and commodity price shocks, keeping inflation elevated and pushing interest rates higher than markets currently expect. In his annual letter to shareholders, Dimon highlighted growing risks from global conflicts, including the West Asia crisis, the war in Ukraine, and rising tensions with China. He cautioned that these disruptions could reshape global supply chains, adding to inflationary pressures and complicating the outlook for central banks.
JPMorgan Chase CEO Jamie Dimon on Monday warned that the war in Iran risks persistent inflation that will push interest rates higher than the market expects. His cautionary remarks came in his annual letter to shareholders, in which Dimon warned of significant challenges brought on by geopolitical events, including the war in Ukraine, broader hostilities in the Middle East, and tension with China. He said that, quote, "Now, because of the war in Iran, we additionally face the potential for significant ongoing oil and commodity price shocks, along with the reshaping of global supply chains, which may lead to stickier inflation and ultimately higher interest rates than markets currently expect." Dimon's shareholder letter was delivered a day after President Donald Trump ratcheted up pressure on Iran in an expletive-laden social media post in which he threatened to target power plants and bridges on Tuesday if Iran does not reopen the Strait of Hormuz. Dimon, who has run JPMorgan Chase, the largest U.S. bank, for 2 decades, said that time will tell whether the Iran war achieves the Trump administration's objectives, adding that nuclear proliferation remains the greatest danger from Iran. War-driven inflation worries have led markets to largely rule out interest rate cuts from the Federal Reserve this year. Last week, the S&P 500 notched its worst-performing quarter since 2022, weighed down since late February by the Iran war and the resulting surge in energy prices.